Good afternoon from London. I know we have people joining us from all around the world, so good morning or good evening, wherever you are joining us from. And welcome to today's webinar on keeping track of fintech. How should governments measure fintech's growing importance? I'm Siobhan Bonita. I'm a former UK senior civil servant, and I'm delighted to be chairing this webinar on behalf of Global Government Fintech. Now, in terms of today's topic, governments worldwide are putting increased focus on fintech, both in terms of encouraging the growth of fintech ecosystems, but also exploring their own use of fintech solutions to improve their operations and the delivery of citizen services. And whilst we hear quite a lot about fintech hotspots and private sector activity in this area, the way in which the public sector engages with and invests in fintech is not really discussed as much. So in today's webinar, we'll be looking at those issues, asking how and why governments should be tracking and enabling fintech, and how they can share and learn from experiences when it comes to comparing fintech activity and investment across national and international borders. Now, we have a really great panel with us here today, and in a moment, I'm going to ask them to give us some opening remarks. But this is also your opportunity, this webinar, to put your questions to that audience. So whichever device you are using, you should find there is a Q&A button somewhere on your screen. Please, at any point from now onwards, use that Q&A function to message in your questions, and we'll get through as many of those as we can before the end of the webinar. But let's turn to introducing our fantastic panel. So first, we will hear from Mahesh Uttamchandani, who is the Practice Manager for Financial Inclusion and Access to Finance in the Finance, Competitiveness and Innovation Global Practice at the World Bank Group. In this role, he manages the group's global work on payment and market infrastructures, and responsible financial access and credit infrastructure. He also jointly leads the Universal Financial Access 2020 initiative. Then we will hear from Professor Bonnie Buchanan, who is head of the Department of Finance and Accounting at the Surrey Business School in the UK and a professor of finance. She's also director of a new fintech centre at the Surrey Business School and is a member of the Centre of Digital Economy. In 2018-2019, Bonnie served as the Fulbright Hanken Distinguished Chair of Business and Economics at the Hanken School of Economics in Finland, where her research topic was fintech in the Nordics. Then we will hear from Nouran Youssef, who is a senior financial sector specialist at the Arab Monetary Fund based in the UAE. In her current role, she provides support to Arab countries in fields of fintech, digital financial transformation, and digital financial inclusion. Moreover, Nouran initiated the creation and development of the AMF's Regional FinTech Index, which tracks the development of the fintech sector in Arab countries. And then last, but by no means least, we'll hear from Sam Sharps, who is Executive Director of Technology and Public Policy at the Tony Blair Institute for Global Change. Sam started his career in the British government with a focus on communications and technology. Since leaving government, he's worked across the public and private sector, including working for Apple, where he led engagement between the company and political stakeholders. In his current role, Sam is particularly focused on working with technology companies to build sustainable solutions that positively impact people's day-to-day lives all over the world. So I'm sure you'll agree with me. We do have a stellar panel here. As I said, please don't be shy. Send in your questions. There's no bad question on this topic, and we will get through as many of those as we can. But now, without further ado, I'm going to invite Mahesh to give us his opening presentation. Over to you, Mahesh.
Thanks very much, Siobhan, and thank you for inviting me today. I think if I look at this from the perspective of a policymaker in the government, particularly in an emerging market, and I ask, what can fintech do for my constituents? One of the core answers I would suggest is the notion of financial inclusion, right? And this is the idea of connecting the unserved and the underserved to financial services. And we know that this actually has a material impact in reducing poverty, allowing people to pay and save, allows them to smooth their consumption. And when we think about the global poor, particularly those earning less than $2 a day, their earnings are very uneven, right? They don't go to a job and earn $2 every day and get a paycheck at the end of 2 weeks. And so having a means to pay and save helps them manage the unevenness of this of this earning. And we know that this then is a gateway to other more complex financial services, whether it's insurance or other types of investments. And so if I look at it from that perspective, right, of reducing poverty fundamentally, particularly in an emerging market, I think it's important to note that the number of people living in extreme poverty has fallen significantly since 1999 by about 1 billion people. But this global pandemic that we're living through or have lived through has been incredibly regressive in that sense and very punishing for the poor, particularly for poor women. And so we've seen about 150 million people fall back into extreme poverty in 2020 and 2021 as a result of the pandemic. And so looking to fintech to help us alleviate part of this problem, one of the things I look at is the underlying gender gap, for example, in mobile ownership, which remains a challenge in many regions. We're sort of seeing about 300 million fewer women than men using mobile internet in emerging markets. And this in some ways drives an almost 10% global gender gap in financial inclusion. And so we think that fintech can, if fintech policies are properly invested in by governments, they can significantly help close this gender gap, which will bring more women into the financial system, which will, of course, help alleviate the gender gap in poverty. So why will that happen? Well, I think innovations in fintech are lowering costs and increasing the speed, transparency, security, and availability of digital financial services to reach the poor at scale. And we all use this term fintech somewhat loosely, but from my perspective, I think it's best defined as the sort of digital technologies that have the potential to transform the provision of financial services and to spur the development of new business models and products. And so in 2018, we joined forces with the International Monetary Fund to jointly adopt the Bali FinTech Agenda, which recognized this concept or this definition of fintech and provided an overarching framework to guide countries to address the challenges and opportunities that it might present. And one of the things we saw in doing this is that mobile money really has been the first wave of digitally enabled or fintech enabled financial services that governments have helped create an enabling environment for. And of course, the private sector has stepped in and leveraged that enabling environment. But this has been really part of the first wave that has helped improve financial access. So a lot of people will be familiar with M-Pesa in Kenya. When it launched in 2007, in its first 13 years, it signed up over 850 million registered mobile money accounts. It helped spawn an innovation inside and outside of Kenya that led to 850 million accounts across 90 countries. And there are today probably about 1.3 billion US dollars transacted through these accounts every day. So the ability to go to scale is just staggering. And there's probably about 25% of adults in sub-Saharan Africa today that own an e-money or mobile money account. And this goes as high as 75% in Kenya or 50% in Uganda, where e-money has really been present for a long time. So we see, again, the ability of some of these solutions to go to scale. And coming back to the idea of the regressive nature of this pandemic and its effect on women, we've seen in Kenya in particular that access to mobile money services has reduced extreme poverty and increased savings among women-headed households by more than 20%. And so even before the pandemic, we saw that government payments particularly, so when government invests in digitizing its own payment processes, rather than literally distributing cash, whether it's for maternal payments or whether it's for health payments, or of course for COVID emergency payments, it led to about 140 million women being fueled globally to open their first financial services account. And then these accounts can then be used for other more complex financial services, again, whether it's borrowing for your entrepreneurial initiative, starting a business, or whether it's accessing insurance or other products. And so, during the pandemic, the growth of these accounts to receive a government payment really grew at an amazing rate when government made that investment to digitize its own payments. The other thing government can really do is to invest in opening up the financial sector in a safe and responsible way. And by this, I mean, we are seeing the proliferation of non-banks, not traditional banks regulated in a traditional way by the central bank, coming into the payments and saving space. And these could be, of course, mobile phone companies. They could also be so-called neobanks, which start with a very specific and limited purpose and can give access to the unserved to limited kind of use transaction accounts for basic financial services without the burden of heavy KYC or know your customer procedures that can sometimes be cumbersome and expensive and make it ineffective from a financial perspective to serve the poor. So we're seeing the proliferation of all this in countries where governments are making these investments. But we're also seeing that it's not purely a financial sector issue. Government needs to consider making the investments to the enabling infrastructure that will allow the financial sector to leverage these innovations. And one of the most critical ones is digital identification. I think a lot of people will be familiar with the Aadhaar example in India, where about 1.3 billion people have been onboarded to a digital ID system. And this has led to simplified or electronic or eKYC innovations that are making it a lot cheaper and faster to have stronger authentication, cheaper account onboarding. And again, it's particularly women that have been disproportionately excluded from the financial sector and are therefore disproportionately enabled by some of these innovations. Bangladesh, for example, recently issued eKYC guidelines, which have transformed account opening, which used to take 4 or 5 days and require someone to travel sometimes long distances to bricks and mortar banks, to less than 10 minutes. And not only has this served women, it's served less literate groups at the sort of base of the economic pyramid. So this has been an incredibly powerful innovation that one might think of as being outside the traditional financial sector, or outside the traditional purview of a central bank regulator, but is really critical to using fintech to open up access to financial services. The other thing we're seeing is I think a transformation, we can call it fintech 2.0 or 3.0 or wherever we are in that cycle. But the evolution from kind of basic payment and saving services to much more complicated platforms that provide a host of other services, so-called kind of super apps, as they're being referred to. So in Indonesia, we have Gojek, which is an example of a platform that offers probably about 20 different services, including financial services through their GoPay app, and across multiple countries in East Asia. And these are platforms now where businesses can, even if they're micro businesses, sole entrepreneurs, can sell through the platform. And actually the data that is tracked and harvested through their sales can actually provide a credit trail that enables them to borrow money in a way that traditional credit reporting has always left businesses like that excluded. So again, the network effects of having people on these platforms has enabled fintech to allow people to leverage them for additional financial services. Now, I don't want to, I'm conscious of the time, Siobhan, but and before I wrap up, I don't want to be naive about the risks that are associated with all of this. And I think, again, one of the investments government really needs to make is in what I call both ex ante and ex post regulation. Ex ante, to make sure that there are actually rules in place that financial service providers have to abide by, whether it's on sort of the black box of algorithms and making sure they don't perpetuate discrimination, or also simply in how financial services are presented to consumers on a mobile device, and making sure that there's proper disclosure, including for low literacy consumers. But then the ex post part of it is making sure that there are redress mechanisms, right? And there are proper complaint mechanisms that can be put in place that are not so onerous in shifting the burden to the consumer. And one of the things that, again, a different branch of fintech has been able to do is so-called soup tech or supervisory tech that has actually enabled supervisors to use artificial intelligence technology to make it easier and simpler to process claims and complaints. And I think it's important that we look at that aspect of it. So let me stop there, Siobhan.
Thanks, Mahesh. A great way to set the scene, because I think you've covered a lot of ground there. Lots of issues I think others will pick up on, the audience will be interested in. Good to hear that you answer straight up front the question why. Why do governments need to care about this? What are the benefits of fintech? So from, kind of development point of view, how this can be used for reducing poverty. You've mentioned there some of the specific issues around equality and gender in particular, and how some of the what we've seen during the pandemic, for example, has really sped up that pace of change, using these payments to get money out to the poorest and most vulnerable in societies. Also, you touched on there the next wave. So what's the evolution now of fintech? So moving from just the payments and the savings to more complicated financial services as well. And then, yeah, really good that you mentioned at the end some of the risks around this, and getting the regulation right, really, really important. So thank you so much for setting the scene in that brilliant way. And now I am going to invite Bonnie. Bonnie, over to you.
Thanks, Siobhan, and thank you to the Global Government Forum for inviting me here today to share on experiences around fintech. And just to follow on from Mahesh, this and delivering the why, and I'm just going to do my punchline up front, why it's so important for government engagement is financial literacy and digital literacy, that we never lose sight of those. And, Mahesh had mentioned, the importance of fintech in reducing wealth and income inequality around the world, where we've got approximately 2 billion people unbanked at present. One of the reasons I became interested in fintech in the first place is I teach a course in the history of financial crises. And often one thing, if we look at history, that comes out of financial crises is innovation. So, and if we look at the 2008 financial crisis, a lot of the fintech innovation that we see now has been post-2008. But there's another reason, in the 2008 global financial crisis, a lot of trust was lost in the traditional financial institutional framework. And so and also too, I remember there was a very famous paper of Tom Philippon's in 2016 out of NYU, where he looks at about 130 years of data, cost of financial transactions, and found, wow, in the United States, and found, wow, they hadn't really come down much beyond an average of 2%. So what about fintech? And, he, for one, like myself, is very optimistic about the future of fintech. So I'm interested in fintech, whatever application we're looking at, blockchain, and that includes cryptocurrency, smart contracts, analytics. So I include in my definition and my research on fintech, artificial intelligence, machine learning, deep learning, the use of alternative data, deposit and lending. So that's I've done a lot of research in peer-to-peer lending, particularly there's one study I did for the Swift Institute called Quo Vadis, fintech in China versus the West, where I look at the peer-to-peer lending models, such as the notary model, the guaranteed return model, and just the very original one where it was just pure matching in China, Scandinavia, the United Kingdom, and the United States, and the very different paths that they took. And if you look at peer-to-peer lending right now, it's one of the few fintech applications that predated the financial crisis. One of the first platforms was Zopa out of the United Kingdom, but it looks very different today, peer-to-peer lending, compared with 2005. I mean, look at Funding Circle. They're now just really taking institutional investors, not retail investors. So, some of my research has charted, the wild, wild west in some cases of peer-to-peer lending and the regulatory response. Some of my other research has tracked and covered mobile payments in Scandinavia versus China, the United States and United Kingdom, banking infrastructure, how, fintech helps instill trust post 2008. something we weren't talking a lot about 10 years ago, but it's finding wider applications right now through investment management, chatbots and robo-advisory methodologies, insurtech, regtech, and proptech. So, you know, there are some excellent studies out there looking at, there's a very good one by Chen Wu and Yang, where they just simply take US patent filings and say, you know, where is the value in fintech right now? And just looking at US patent filings, they find that blockchain is particularly valuable right now and has a lot of promise, as does the Internet of Things, robo-advising, and cybersecurity, which is every chief risk officer's, you know, thing that keeps them up of a night. So, as I mentioned, you know, my research has largely been on a cross-country comparison basis, use cases, and particular applications of fintech, what works in some countries, what doesn't work. And I'd just like to also comment on where I see the emerging areas of research in fintech right now, or what we might call the gaps. I think one particularly fruitful area is insurtech, particularly insurtech as it relates to the gig economy, how we can use artificial intelligence in data collection, optimizing our risk analysis, machine learning for how we can systemize unstructured data, and also very importantly, identify fraud detection in the insurance industry. The internet things, you know, it could be something just like a Fitbit or an Apple Watch, these sensory devices that you might even have installed in your car that really help insurers get a better understanding of a consumer's risk profile and be able to issue insurance claims much more quickly. The improved use of smartphone apps to provide better customer engagement and improved consumer service. And we're also seeing an increased use of drones in collecting accurate data and support of underwriting inspection. So just an example of that, you know, I file a claim with a photo of the accident. You know, we have some insurtechs out there that use drones to say, well, actually, is that an accurate portrayal? Or has that photo been used before in a previous claim? And also when it comes to managing huge amounts of data, which is what underpins the growth of fintech, that's where blockchain becomes particularly useful as well and valuable. I think the whole lending model, deposit and lending model in fintech, how those loans have worked in the lead up to the COVID pandemic, the shutdowns and lockdowns we've seen around the world, I think a lot of the success of those lending models is still being tested post-COVID. So what we're really going to need to look at with increasingly more complex algorithms and the use of alternative data. So I'm talking about alternative data here, not just data I might trawl from internet sites, but I'm also talking about the increased use of synthetic data, okay, as opposed to raw data or anonymous data. How will that help us in finding what we call the new normal in a post-COVID economy? Right now, with the use of blockchain, we're seeing a very turbulent cryptocurrency market. You know, stable coins have had a very bumpy ride. But also, I think one area that's still in its nascent days, but we can't ignore in the fintech arena, is how quantum computing will impact fintech as well. So really what quantum computing is bringing to the table for fintech is a new potential to process information that at speeds that we previously thought impossible for traditional programs and processing. So we're no longer talking about binary or 0-1 ways of processing information. We're now talking about qubits. Okay, so where a computer can now possibly process 4 values or 4 states at any given time. Now that has an enormous potential to change and help develop fintech, but also, you know, how can we incorporate it with blockchain and how can we protect blockchain from quantum computing hacks. If we look at the use of cryptocurrencies, and also, I mean, I'm thinking about what we were talking about or not talking about a year ago, something like non-fungible tokens, okay? Non-fungible tokens, blockchain, and more decentralized finance. We're now talking about the world of the metaverse. And, you know, if we're looking not just at retailers and financial service providers being involved in the metaverse, we're now seeing governments entering the metaverse space as well. So Dubai has already created a decentralized regulator model in the metaverse. The Chinese government has also established a metaverse industrial fund to attract social capital. And the Seoul Metropolitan Government has also announced that it's the first major city to enter the metaverse. And this is really to include economic, cultural, tourism, educational, and civic services as of this year. And my final two areas where I see an emerging field of research is in tax collection and the blockchain. We're already seeing that in Finland with tax administrators working with banks to track taxes on real estate transactions. We're seeing it in Sweden. Blockchain's been used to test and digitalize receipts, non-resident income tax as well, and customs duty. We're also seeing it in Estonia, Brazil, and across the European Union. And my final remarks is the combination to how can we use fintech methodologies, tools, and techniques with climate finance and climate change, sustainability, and all of that to help ongoing financial literacy and digital literacy. So I pardon the rapid tour through there, but it's a constantly emerging field. It's just been added to all the time. So thank you for your time.
Brilliant. Thank you so much. But I know you had a mammoth task there to kind of summarize all of the research in academia at the moment. And you've done a great job there of giving us that whistle stop.
Look, you could just do a talk on, you know, tax collection. You know?
Exactly.
Yeah.
Exactly.
Thank you, Siobhan.
But really good. I think a couple of the points that struck me, the issue of trust, I think a really important one, that loss of trust after the crisis, and how fintech can play a part in reinstalling some of the trust there as long as those systems are secure. And there's key areas that you mentioned that governments will be moving into. So using fintech for fraud detection, for example, and looking ahead to tax collection, to climate finance and sustainability as well. I have to admit, you've taken me out of my comfort zone by talking about kind of everything from cryptocurrency, quantum computing, and the metaverse, but I will do my best to keep on top of all these issues, and I'm sure our audience will have lots of questions.
Yeah, but we were hardly talking about this a year ago.
Exactly.
Yeah.
That just shows how fast this is evolving agenda. So thank you.
Thanks, Siobhan.
For that. Thank you. Noran, we're coming over to you now.
Thank you so much. I'm really pleased and honored to be with you, all the esteemed participants and the distinguished speakers. I will be talking on a respective or regional perspective of the fintech industry in the Arab region. Next slide, please. I will quickly skim the drivers. Mahesh and Bonnie have already elaborated on this. Arab countries have done or conducted many initiatives to foster this fintech ecosystem and really try to do the balance between the financial system integrity and enhancing financial innovation. And this is why the AMF have thought and already established a fintech index for the Arab region, and the main consideration that we took of this index. Next, please. So typically, as my fellow speakers have mentioned, government are really engaged to promote fintech ecosystem and to let it grow for improving the access to financial services, and then scaling up new opportunity to the small and medium enterprises, microfinance, the youth, women, and even refugees, which all are, let's say, vulnerable communities. And these all tranches or breakdown of people, it's mainly important for our region. This is because the simple reason is the Arab region is a young area compared to other geographical area across the world. And this also coupled with a high unemployment rate, and in particular among females. And this is given as well that the private sector contributes with more than 75% with the GDP across the region. And adding to all of this, what we have seen as COVID repercussions of the contactless and the remote transactions, all of these push to more financial innovation and to adopt more innovative solutions. However, there is definitely some challenges considering the decentralized and the peer-to-peer nature of this innovative technology, and even the available financial data on transactions. There is no even data or are scattered or not enough. So regulators or the government are really facing a good challenge in that space. And this is the reason behind establishing the fintech index for the region and building kind of a database as well, or repository of information on fintech industry within the region. So the great importance to support the introduction of innovative financial products that cater our needs, but without jeopardizing the stability of the financial system. Then governments maybe need to have a proactive, comprehensive, and coordinated approach to realize this at the national level. Next, please. For the region, Arab countries have taken various initiatives that serve the goal of setting, let's say, a proper fintech ecosystem according to individual country specificities, infrastructure needs, buy-ins, and whatsoever. And really, they nurture this to grow without risking the integrity of the financial system. And if we can classify these initiatives, we distinct four main areas. The big bulk is within the policy and regulation areas, and then upgrading the financial market infrastructure and to make more robust and resilient infrastructure, giving all the tremendous solutions and platforms that are running around us. And we see initiatives to develop local talents. And the least thing, really, it was the initiatives to are done for fintechs and fintech startups to enhance their access to finance. This was the least thing, and this is very important. We have, next please, we have initiated last year the fintech index for the Arab region, which will be issued on annual basis, inshallah. It covers the main fintech ecosystem and tackles Arab countries' diverse initiatives to promote such industry, by which we're trying to monitor progress in fintech activities year by year and to support their policy formulation. Also, it's composed of main 6 pillars, or let's say 6 sub-indices, which constitute the main index, the composite index. And this, every single Arab country, the weight in the index is composed of 100 points that are distributed among pillars. And for the composite fintech index itself, by the way, it's named FinXR, Fintech Index in the Arab region. Of the 100 points, it reflects all Arab countries without any weighted average or any weight for particular Arab countries versus the other, which is calculated as a simple average for all weighted indices, the 6 indices that we talked about. Regarding the organizations that are responding to this survey and let's say the frequency, Arab central banks in the region are the leading authorities that govern the fintech activities. And they coordinate with other official or other authorities when they need any additional information to respond to the survey, and then revert to the AMF with the fully covered information or the fintech survey questions that are fully responded to. And the index is launched last year in April 2021, and it will be released the third quarter in every year. So here we have our 6 main indices or pillars that constitute the Composite Index. The first one for the policies, laws, and regulations with a weight of 25 points. It covers the various initiatives taken by Arab countries on the level of laws, regulations, policies that can foster the fintech sector, whether through a package of programs, including the national strategies for fintech or digital transformation, the provision of institutional framework, the governance scheme at the national level, the extent of regulatory sandbox, the regulatory framework available for various fintech activities, and I have mentioned the pertaining governance framework because it's really important. Secondly, is the demand side index or enhancing the demand, which is focused on the country's initiatives to enhance the demand side of individuals and businesses alike. It's really, in terms of the availability and how the leading institutions are enhancing the digital financial services and products, so the matter of the supply as well, and promoting financial education and the digital financial awareness, where Bonnie have stressed, and it's really important. It takes a good part of this, as well as the access and use of the internet, smart devices, and all these stuff. The third index is the funding index, which tackles the country's initiative to support providers of innovative financial solutions and services in accessing finance. This includes fintech companies, emerging startups, adding to it the extent of funding received by the fintech sector in general from banks, the amount of lending by financial institutions and banks to fintech companies, in addition to the volume of the investments directed to this sector in general and to fintech companies in particular. This includes as well the government initiatives to have, let's say, government funds to enhance competition at the level of the universities and so on. If the regulator incentivizes the financial institution to give funds, whether by deploying loans or to have access to the capital of the fintech companies and so on. Talents, the talent index, it's the talent development that cover countries' effort to develop the capabilities of talents, whether entrepreneurs or students, and the capacity building of the regulatory and supervisory authorities, the professionals there that are running the show. This includes as well the various events and competition, including hackathons, tech sprints, whether at the national level or the university level, or even in collaboration on the regional or international level. And all of these aiming at driving financial innovation. And this is along with the training and capacity development programs received by the professional of the regulatory and supervisory authorities as well. The fifth pillar, or the fifth index, it's dedicated to the financial market infrastructure, which address the efforts and initiatives of Arab countries in upgrading the financial market infrastructure. The pillar reviews the current financial markets infrastructure system and the requirements for compliance, how to enhance their initiative to enhance the infrastructure of ICT in general and digital payments in particular. This is in addition to the efforts to digitalize the government payments, which already mentioned by Manish earlier, the interoperability between system and networks, the enabling infrastructure for remote customer onboarding, and if fintech solutions are employed in like blockchain, AI, and so on, in settlement, clearing, trading of the financial markets, if we adopt alternative financing platforms, and the accompanying regulatory framework, definitely. The last one was the collaboration and partnership index. And this pillar underscores the cooperation at the local level within fintech industry stakeholders and between the stakeholders and similar bodies at the regional and international level. And I would like to stress here the important part of it, which is the partnership between the financial institutions and fintech companies. The well-established financial institutions in terms of regulations, capital, customer base, and the innovative provider, which are the fintech companies. Next, please. This is a small, let's say, illustration of the composite index and the 6 main indices. Next, please. Here I have already, and I will skim this very quickly. On the policies, we ask about many things. I would like to let you know that all the questions of the survey across the 6 pillars is around 100 questions. However, here the main theme are the definition for fintech activity strategy, the governance scheme, if they apply innovation and if they have innovation and fintech unit or office, if they adopted experiment environment like the sandbox, if they have a fintech association to enhance the dialogue between the fintech stakeholders, if the regulators employ RegTech solution, which is the supervisory one, and if they embrace the RegTech solution for the institution. Next, please. For the demand, there are many aspects as well. However, the financial and digital financial awareness is very important. As you know, the internet and mobile and smartphone usage, if there is a fintech hubs in terms of accelerator and incubator to drive the new and digital financial, let's say, solution, because really it's a matter, it's not a demand. Also, the rich supply really play a role to enhance the demand. So to enhance the demand, we have main 2 issues, which is the financial and digital financial awareness and education, and to provide people with really more digital financial services and solutions, so to enhance the supply and definitely embrace the infrastructure in terms of internet, mobile, and smartphones, and so on. Next, please. For the funding, as I told you, it's maybe the access to capital as a major component to drive the fintech industry, particularly for the fintechs and the startups, whether by government funds, university funds, ensuring incentives from regulators to financial institutions to deploy finance to fintechs. Also, regulators may support the financial institution funding to these small fintech or fintech companies. Next, please, for developing talents, mainly the competitions or the hackathons, the tech sprints that really drive new digital financial services, the training across all stakeholders, the young people, the youth, in the regulatory and supervisory authorities, in the financial institutions. So across the board, we need the training, and definitely the university competitions. And if the country really take various events to foster fintech and innovative solutions. And the financial market infrastructures, so strengthening this, as I already said, and mainly whether it's on the broad ICT or for the digital payments, or adopting some solutions like the biometrics or blockchain for the KYC, CFT, or, there are many aspects. And what are the efforts done to make all the system interoperable, and if they have national strategies for payments or for financial market infrastructure or for digital payments, and so on. And the last one, this is the collaboration and partnership, whether interagency between the different government authorities or agency, the collaboration within the region or international peers, and the coordination with standard setters, because it's a peer learning and it's very important to align not standards but common understanding of main concepts, the partnership between the financial institutions and fintech firms, and the regional and international accelerator and incubator that really help to drive more sustained even digital financial services. And some consideration we have, next please, which is, let's say we have many things that we really discovered. We need to enhance data. We need to have a national database for the industry, including the investment volume, the financing volume, and the number, and who are the startups or fintech firms, and so on. So we need the database, and we need to nurture the data across the country, and continue the efforts related to policy and regulations in a balanced way to have really to ensure or to save the integrity of the financial system. And this includes the licensing and regulating the the fintech firms as well. And definitely, at least for our region, more initiatives are needed to support access to capital and raising funds. And I would like to mention the last thing, the importance to ensure a feedback loop and strengthen the role of the innovation office at the regulatory authority. And thank you so much.
Thank you, Nora. Thank you so much. I can sense your passion through my computer screen. I think this has really been your baby, developing this. And I can see how much you want to fill us in on all of those elements. But I think it is really interesting to get the perspective from your specific region, the work that you've done there, and to see how you've unpicked those 6 pillars that in its entirety make up what you believe are the kind of right conditions for this financial innovation and the growth of fintech. I'm sure there is lots in there. I see we're getting questions in from the audience already, so thank you. Lots in there for the audience to unpick. And interesting what you said at the end there about feedback to innovation, because it's interesting, one question, where does this sit in a government? Does it sit with finance? Does it sit with innovation or strategy? And actually it looks like it sits across all of those things. So really interesting to have all of that from your perspective. Thank you so much, Nora. And Sam, you've been waiting very patiently there. We're going to come over to you for your thoughts.
Thanks so much, Siobhan. And thank you very, very much for inviting me to appear today with a very esteemed panel. As I listened to those first 3 presentations, I thought there is so much commonality here. I'll endeavour not to repeat anything that's been said, but in a way it's very affirming that some of the work we've done is being echoed by the excellence organisations you see represented on the panel, and a lot of our conclusions, I think, are going to be broadly in the same place. So just for those who aren't familiar, the Tony Blair Institute is an organisation that works around the world, but with quite a large focus in Africa, to bring together policymakers and change makers to ensure that, on the one hand, we have vibrant economic development, and on the other, we have good, sound governance in a way that the two can support each other. And as part of that focus, we spent some time at the back end of last year and early this year looking at the right policies to support Africa's startup scene. So to, I think, supercharge the startup system in Africa is how we phrased it. And that was based on a number of observations we made. One being that in Africa, you have a young and growing population, which is likely to reach 1.5 billion by the end of this decade, many of whom will have grown up in the internet era. You have an entrepreneurial culture spread around the continent, so there should be, a substantially fertile ground for people wanting to start their own business, develop their own markets. And you have, in the case of this conversation, a somewhat unique environment in which the traditional banking system, as you might know, it's in Western Europe and the US and elsewhere in the world, is not as widespread or not as deeply rooted as it is in other parts of the world. There remains a substantial number of people unbanked in Africa. And this potentially means there's much more of an opportunity for them to leapfrog that stage of development in terms of financial services and go straight to a fintech solution. And so for that reason, I think there's a real energy in African fintech. We've already heard today some of the excellent examples of what's going on. If you look at the numbers in investments in fintech startups, in dollar amounts, they account for more than half of all tech startup funding. And it's easily the biggest subsector within tech startup funding. But the sad reality for Africa is that as a proportion of overall investment in tech startup funding, it's still at a very, very low level. And so even at about 5 billion last year, this is US dollars, and even with a growth curve that is pointing quite sharply upwards, it's still going to lag behind as a proportion of investment, the more traditional senses of tech startup investment. And we think that's a problem. We think that's something that good governance and the right policy can overcome and can significantly lift where that graph takes us. So we put out a report earlier this year setting out, I think, 10 recommendations overall. As I say, some of those will echo what we've already heard today, and I won't spend time going through all 3 of them. You can essentially bracket them into 3 different categories. First, there are some measures to close the funding gap. That's changes around capital rules, which institutions are allowed to invest, under what circumstances investment can take place. There's building the business environment, which is in many ways a kind of huge macro endeavor that takes in everything from fixing infrastructure to regional integration to stable taxation environments. And then there's nurturing connections. And what's really interesting is, even with all the research we did, it was somewhat difficult to put your finger on how many startups there are, how much funding they're receiving, where they are, where they're clustered, who they're interrelating with. And this seems to be a problem for a number of reasons. One being that potential investors just don't know where the action is and who they might be able to speak to. And the other being that individual startups who would undoubtedly benefit from peer-to-peer advice and networks and the ability to learn from other people's experience aren't really getting that kind of grounding and that network. There's some good pockets of good practice here, and we might later in the conversation come on to where they are. But overall, we felt that even getting realistic data about the tech startup scene was somewhat difficult. There's some people doing some good work, no doubt for their clients, but publicly available, genuinely usable and intercomparable data between even national capitals was really, really difficult to come by. So for all those reasons, I think we are cautiously optimistic about where the fintech scene could go, but we think there's quite a lot of work for governments to do. And that's something the Tony Blair Institute spends a lot of time working through with national governments. I'm really, really interested in examples of where else is being successful in putting those frameworks together. So Nuran's presentation was absolutely riveting to me. I'll kind of leave it there. I think there are a set of approaches and pockets of good practice in Africa around all of these issues. Overall, our feeling is they need to be much more joined up. There needs to be a much more regionally integrated approach. And if governments and policymakers can kind of maintain that optimistic view of where Africa could take itself in terms of tech investment and fintech development, there's a huge opportunity to be had, but there's a lot of work to do. So I'll stop there, Siobhan.
Thanks, Sam. Yeah, really good to hear that from perspective on the research that you've done in the Institute in Africa. As you say, lots of opportunities, obviously there, as you can say, but it's interesting to hear why you've set out some of the challenges and some of the barriers to that as well. And I think that builds on some of the things that we've heard from the other speakers as well. So thank you all of you for your opening presentations. But actually, Sam, I'm going to use what you said to go into our first round of questions. We do have some coming in from the audience. Please keep those coming in from the audience. But I just want to come back, and I'll start with you, Sam, building on what you said. Why do you think governments maybe are moving quite slowly, or do you think they're moving quite slowly, or is it just that the sector has moved very quickly and governments are now catching up? But why do you think they're moving slowly? And actually, where do you see any particular examples of good practice from governments?
Yeah, really interesting. So in the Tony Blair Institute, a lot of the work we do is around trying to boost capacity in governments to make policy in the face of a very, very fast moving tech sector. And our executive chairman, Mr. Blair, is quite blunt in saying that, you know, an awful lot of policymakers have come to prominence in an era before a lot of these technologies existed, just trying to get a base level understanding across policymakers is a real challenge. And it's not to criticize anybody, that's just that is just the nature of the technology we're facing nowadays. But the other kind of element to policy making is that in some instances you will have incumbents, and in some instances you will have very, very well-intentioned and appropriate regulatory frameworks which make life somewhat difficult for an innovative, disruptive new tech startup. I think I spotted a question in the chat around the UK approach. I mean, that's a really interesting example, actually. So if you are the financial regulator or the finance ministry or whoever's responsible in any national capital for regulation, you face this dilemma of wanting to encourage innovation and competition, but at the same time not disrupt or introduce systemic risk because, you know, one of these tech companies might fail, it could, you know, be subject to fraud, there could be all sorts of consumer damage done. And so if you're a policymaker, you need to tread that tightrope of providing sufficient confidence for consumers that they can go and use these technologies while also allowing a certain number of risks to be taken. And I think Noran touched on this. There are some interesting models emerging around sandboxes and how you can gradually license the introduction of tech innovation to a market without putting all your eggs in one basket. And that, I think that's a really interesting approach. But that's something that regulators are having to innovate on quite quickly and having to move quite rapidly on. The final thing I'll say, and then others might want to have a comment as well. Even where policymakers get all this and are moving in the right direction and instigating the right policies, there are other elements of government policy that can make a big difference. So taxation policy, currency instability, lack of infrastructure, all of these things can kind of counteract all of the good work that could be done specifically on fintech. And so it is that holistic approach. It is that kind of bigger vision you need if you want to really succeed in this sector.
Thanks, Sam. Mahesh, it feels like a long time since we've heard from you. So I'm going to put the question to you. Do you think governments are moving too slowly? And also you touched on some examples. For example, you mentioned India, just for its sheer scale of some of the fintech solutions it's put in place. Are there other examples of pockets of good practice that you could share with us?
Sure, Siobhan. I mean, I think Sam said it very well in terms of the metaphor of the tightrope, right? And I think that is a challenge. If I'm a policymaker today in a government, in addition to wrapping my head around the technology, I have to walk this important tightrope. And I think it's important, not just for the obvious reasons of consumer protection, but I think if we think of the damage that could be done to fintech adoption, right? And to adoption of some of these new solutions by a scandal, whether it's a data breach or whether it's, you know, some other challenge, I think policymakers are thinking very carefully about their responsibility, right, for managing those risks. But I mean, take the example of Ghana, for example, right? Between 2014 and 2017, I believe, mobile money penetration in Ghana tripled from 13% to 39. And that had a consequence of changing kind of financial access from about 40% of the population to 60% of the population. That's a seismic change. And I think it was largely catalyzed by the Bank of Ghana's new agent and electronic money regulations, which permitted non-banks, as I was saying earlier, like the mobile phone operators, to own and run mobile money businesses that offer payments and deposit accounts. And I think, again, that's smart regulation. It had to be managed carefully, and it had a material impact. But I think that government had to be mindful that even as we move more towards a digital future, cash, of course, is still going to be important, particularly in low trust environments, particularly in low digital literacy environments. And so thinking in a sense, both about the modernization of finance through mobile money, but also in a sense, a very old-fashioned way of dealing with the bricks and mortar need to cash in and cash out of your mobile account, right? So ultimately you have cash in hand, means you need to think about these agent networks, which in a way are very old-fashioned, but I think that the regulatory thinking around them is they don't need to be bricks and mortar banks. They do need to be physical locations. And you can think very smartly about how to distribute these agent regulations, or sorry, these agent networks. And I think do that in a very, very smart way. And staying with Ghana, in 2018, the Bank of Ghana took kind of digital financial services to the next level by requiring mobile money services to be interoperable amongst themselves and with bank accounts. Again, this is a next stage in the evolution of saying it's one thing to get people connected to a mobile money account, but then to make sure that they really use it and has a real impact in their lives. Interoperability is key so that you don't create these kind of silos of individual providers. And sorry, one last point, just talking about silos, because Bonnie mentioned the very, very exciting and very current topics of crypto and of stable coins. I think we see a lot of regulators starting to turn their mind to the concept of a retail central bank digital currency. We know there's already been one adopted in Nigeria, precisely to avoid this idea of private money siloing people. And you can think of large platforms, the ones we all know the names of, issuing their own kind of private currencies in order to keep people in their ecosystems. And having interoperability across these platforms is so key. And a CBDC with all of its challenges may offer that.
Thanks, Mahesh. Well, Bonnie, I'm coming to you now for this similar thing. So, what would, from the research, where do you think governments are acting too slowly? And both Sam, I think, and Mahesh have referred to a question from Tim Wheelhouse that came in, who's asked about government regulation. And he said, is there a need for governments to give and force regulators to think about competition as well as just ticking the boxes? So is the regulation side of things one of the biggest?
Yeah, I think there's a number of challenges that regulators really face right now, and policymakers. Mahesh talked about crypto. I'll pick up with artificial intelligence and machine learning in financial services alone, just that sector. Just financial services. Developments there are taking pace so fast, and adding an additional complexity to an already complex financial system to such an extent that it's really outstripping the current legal and regulatory framework. Despite that, I'm always optimistic. But it's the rate of pace of growth. And if you think about data alone, I think it's like 90% of the data we see today has been created since 2016. So, you've got to, have these algorithms sort through, what data is relevant, what data is not relevant. One of the things you want to make sure the algorithm's not, doing is pushing you as a policymaker in a direction where it's a false finding. So I'll give you an example of that. I'm often asked, could today's AI have predicted the financial crisis of 2008? I always say no, because it's a combination, not just of models going wrong, but there was, a number of abiding weaknesses in human nature, institutions, and public policy at the time. So, culture matters, education matters. And, if you look at the top factors that contributed towards the 2008 financial crisis, where the banks are often attributed to be part of that problem, and let's just say you tried to apply a one-size-fits-all algorithm there, well, you've got a problem when you come up to the COVID pandemic, because banks weren't the trigger, they were actually part of the solution. So I think that's another danger that and I always like to learn from financial crises, but the danger or the challenge is trying not to proceed with one size fits all model.
Yeah, fix the one, not fix the last, rather than looking ahead.
But I think too, one of the big challenges is the complexity of the financial system. If you think about how it looks now in 2022 compared with 2007, and that's the year the iPhone came out.
Yeah.
And that's the year when we weren't talking really in 2007 about a GFC. We were talking, in some countries about a mortgage crisis.
Yeah. I'm going to come back onto that issue of complexity in a moment. We've had a question. Noran, I want to ask you as well this question about how could governments move faster? But I want to add in, there's a question from Ian that's come in saying, does the existence of your index itself, do you think that has actually triggered action amongst some countries? Because there's this competitive element to be seen to be as good as everybody else.
Yes, for the first year, it was really, let's say, very tough exercise for them. And they many feedback that they don't even have the information or knowledge or data, and they grab their attention to some kind or some gaps in data, the quality of data, the availability of it. And this was our role, to really grab their attention that this is a gap. The second thing was the financial gap. Yes, they're all reached this observation that they need to really enhance the access to finance to the industry as a whole. Also, he asked about the, let's say, the update or the progress of the survey. Yes, we are reviewing it on an annual basis. So before releasing to countries or sharing it with countries, we review it. For instance, this year we have, let's say, removed some questions, added another, or replaced this and added new ones. Maybe we will not be at the same of the fintech progress or the fintech pace really. However, we do this exercise to review it on a yearly basis and have an amended version of it.
Thanks, Noran. I can't believe how fast the time is going. So we've probably only got time for one more round of questions. I'm going to combine two questions, I think, in this final round. Before we do that, I just want to say to the audience, thank you for sending in your questions, but also you'll be receiving a questionnaire in your inbox. Please, I'd be really grateful if you take a couple of minutes to just fill that out. It means we can keep giving you the webinars that are most useful for you. So thank you from me in advance for doing that. But the questions that I want to put, there's two things I want to ask. One, again, from Ian, and it builds on your thing of complexity and I think just how fast moving this whole kind of issue is the challenge with tracking fintech that about the sector's breadth and how quick moving it is. So is that in itself just a challenge to keep on top of what we even cover with the term fintech? And I want to ask as well something that Mahesh mentioned, because you mentioned, Mahesh, digital IDs being at the heart of some of these fintech solutions. In other webinars that we've done, we've made a distinction between countries that have a kind of national ID system they can build on to create digital IDs and those that don't, where that's becoming then more difficult. So do you see it becoming increasingly difficult for those countries that don't have that kind of existing national identity system? Is fintech going to become increasingly difficult for them compared to other countries that do have that kind of system in place? So I'm going to put both those questions to all of you on the panel. Feel free to answer one or both of those questions. Bonnie, I'm going to start with you first.
Thanks, Siobhan. Well, just in answer to the second part of your question, this is where we could even start to see the alternative data field find ways to scale up or ways to mitigate those problems as well. I mean, I work in the area of synthetic data, particularly the ethics of synthetic data, but there may be ways to mitigate those problems with synthetic data. If the answer to that is yes, then it shouldn't be a problem for fintech. Okay. The first part of the question, just an absolute agreement with that. So, I'll keep my answer response. Yes.
This is a challenge.
Yes.
Thanks. Sam, I can see you smiling at the, yes, this is a challenge.
And yes, it is. I mean, yes, there's a lot of innovation going on. There are a lot of models developing that we probably don't fully understand yet and might not for some time. We might not kind of know who are the good guys and who are the bad guys until we get a little bit further along the track. And for policymakers, that is a real issue, particularly when they're trying to construct a regulatory system that's going to accommodate some of that. I guess my plea to us all, though, is that it doesn't mean it's not worth trying. Like, we clearly need to ensure that we've got as strong a view as possible of what's going on out in the market and what some of it means. And for the particular project that we were doing, this is particularly important because in the situation that many African countries are in, there's both a massive opportunity and there's a risk that they could be further left behind if technologies develop elsewhere, and they are at best a kind of afterthought to use technologies developed in the north and the west, rather than part of the story and part of developing the technology themselves. On digital ideas, I don't have a huge amount to add, I don't think, other than to say, we've done a lot of work with different governments around different models of digital ID. I think the value of a robust identification system, particularly in the developing world, is pretty compelling. And increasingly, I think we're going to find issues for countries that have not sufficiently invested in those systems, not just in kind of the immediate impacts, but in kind of broader economic development sense as well.
Thanks, Sam. Noran, I'm going to come over to you. So just your thoughts on the scale of keeping track of this whole thing, and any thoughts on digital IDs?
I totally agree with this. Is a big challenge, and big challenge for the regulators themselves. So they need to speed up their space to cope with this very accelerating and very fast moving industry. Regarding the digital identity, yes, it's a cornerstone for both sides of the table. The customers and the service providers, this will smooth the road of all the services platforms, scale up our experiences as customer, because we will be accessing to more and services will let the providers give us more and more of customized services, and will help the regulator to monitor, to comply with AML, CFT, and so on. So it's a cornerstone, and we have seen how much it make it easier, the online onboarding during the COVID and so on. So it's the main cornerstone.
Yeah, thanks, Noran. Mahesh, we started with you. I'm going to come to you for your final thoughts. And I imagine that the scale and the fast changing nature of this is reflected in the work. I know the World Bank, you bring out your report every 5 years, so you must have seen just how much this is changing very quickly, but also your thoughts on the digital ID issue.
Yeah, we'll be launching our new Findex data report on June 30th, and I think you'll see a lot of changes that have happened, particularly during the pandemic. But on digital ID, look, I mean, I'm coming to you today from Washington, D.C., in a country with no national ID, obviously, and fintech clearly flourishes in this country. So at the most basic level, I guess it is not a necessary prerequisite, but Sam's exactly right that in emerging markets and developing economies, if you want to leapfrog, as it were, right, and also if you want to provide a foundation for so many other services beyond fintech, whether it's health or education, a digital ID can be very powerful. I would sound one note of caution that I think it's really important to maintain that the purpose of those ID are to identify that, this person is this person, as opposed to commingling it with state security issues and, citizenship issues and other of those things that I think can cloud the development of a digital ID. And the last thing I'll say is I think if there's a takeaway here to me in the fintech space, it's that private sector innovation and government infrastructure go hand in hand, right? The perfect analogy to me is roads and highways. And if government can build those roads and highways, we'll get lots of different cars on them that may be very innovative, but I think those two things go hand in hand.
Thank you, Mahesh. What a great point to end on, that governments need to invest in their digital infrastructure as much as they do in physical infrastructure, because all of that ultimately will benefit the citizen. We're coming in exactly on time. I just want to say thank you again to our amazing panel. Thank you to Mahesh, to Bonnie, to Nuran, and to Sam for giving us so much of your time, your knowledge, and your expertise today. On the screen there to the audience, if you enjoyed today's conversation, then please, that we've put up some details of events that we've got going on. We've actually got an in-person event, so in real life in Tallinn in Estonia on the 1st of June. The details, you can register there. That's going to be a really interesting event. And then we've got another webinar, which was mentioned today, this issue several times, on how can fintech help women's financial inclusion in the developing world. So that in particular on the 5th of July. So please do register for those if you're interested. We will be sending the link with the video from this webinar to everybody who registered today, so you can watch it all again, or you can share it with your colleagues. And we will also be sharing a link to an article in a couple of weeks that will write up all of the key issues that came out of today's conversation. But thank you to wherever you are. A really big thanks to our panel again. Enjoy the rest of the day, and I hope to see you on another one of our webinars very soon. Thanks and goodbye, everybody.
Thanks, everybody. Thank you.
Bye.
Thank you.
Thank you.